All right, we're good to go.
Alrighty, I will hop into the calendar. Okay, so this week for news on Monday, we've got core retail sales month on top of an Empire State Manufacturing Index, on top of retail sales month on month, all 8:30 on Monday. Tuesday, you have some yellow folder news or orange folder news, excuse me. Building permits at 8:30, an industrial production monthly at 9:15. You have an FOMC member speaking at 1, and then at 1:15 you have Powell speaking. And then on Wednesday, you have another FOMC member speaking. On Thursday, you have unemployment claims at 8:30. You have a Philly Fed manufacturing index at 8:30. And at 10 a.m., you have existing home sales. Relatively light week for news. Only red folder days are Monday, Tuesday, and Thursday. You do have a lot of Fed talking this week, with the members talking as well as Powell speaking. Keep that in the back of your mind. No news on Friday. I think that's about it. For me on my end, I'd be looking to see kind of where the market is when Powell's speaking, where that day closes following that, and then potentially, looking to see where we're at closed off of Wednesday going into Thursday with that unemployment claims. But for the most part, relatively light week for news. So keep that in the back of your mind. Any questions, comments, concerns? Should be good there. All right, well, I will go ahead and get into the dollar. All right, dollar on a weekly. We've been talking about this BISI in here. We were talking about the buy side in here. Kind of self-explanatory on a weekly. I think we draw to 107.350. To me, this is where I see us drawing. I'd like to see, obviously, if we can start to hold these lows. We have now closed above this SIBI in here. So in reality, I would also like this to really act as support for price to come back. It's just a matter of this week, do we find a immediate rebalance, or do we leave a BISI, right? And I'll be following those BISIs on the way up to 107.350. On the daily, same thing. We wanted to see how we closed above the high in here. Closed above it. Thursday came. We created what we were expecting, a BISI. And on Friday, we wanted to see how we traded, and we just got really good follow through on Friday, right? So eyes are up here. Note that on the daily, you have now closed in this entire SIBI. You also took out this swing point, so I think this one's next. Note that there is some form of inefficiency in here. So I would be keen to note that as price trades up into this area, you might get a little bit of a bounce and then continue higher working in there, right? How far this goes is just dependent on what price looks like when we get there. But for the most part, kind of switching to a decently strong bullish bias on dollar for right now until anything changes, just of the way of us trading into discount, displacing on a weekly, how much we respected on the daily this weekly BISI, and how we've been just creating new displacement to the upside. It's to me, my eyes are up here and only up here. I'm not worried about sell side down here. That's what we kind of were talking about, how for the most part, dollar had been in a little bit of a weird funk where it was kind of hanging out in this area. We weren't sure if it was going to respect this and go lower to the lows, or if we were going to go actually higher. And now that we kind of, after this week, got the follow through of like, okay, yeah, I believe that it's going to go up here. I can start to get a lot more confidence in building the idea that we can run these highs and then potentially come higher into this area in here. But that's farther down the road. My only focus right now is really these highs. 107.350, 107.500. Any questions, comments, or concerns before I give it to Henry? Easy peasy. Sounds good.
All right. And I'll bring up indices. Okay. Let's start with ES. Indices, we've been seeing a bit of retracement back into discount arrays, which makes sense with the dollar continuing higher up toward those buy-side objectives. We've been moving higher for several months on end as well, so at some point you do see a retracement back into the range. All we want to note here is just starting on our monthly chart, where do we have inefficiency and liquidity below? Because remember, we're always working toward the highest time frame area of inefficiency or liquidity. And last week, what we talked about on Friday was that below, if we zoom in here, we had a volume imbalance here on the monthly chart, which I'm actually going to go ahead and remove just to take those lines off here. But we traded into that volume imbalance there, and below you have a BISI here on the monthly chart. That's a buy side imbalance, sell side inefficiency. It means the buy side has been delivered here, but you have yet to have sell side delivery into this price range. Okay, so in order to make efficiency in the market, you need sell side delivery back into this range. Whether we trade down into the range and continue trading through it, or trade down into this range and then work higher off of that, we have yet to say. But as for now, the downside objective that I'm looking at on ES is this range right here. So the high end of that is 51.24 1/4, and the low end is 50.13. We'll have to see where we open up at 6 p.m. today. I know there was some political news over the course of the weekend, so we could potentially see a larger gap down. But this is, regardless whether we gap down or open right where we closed, this will be what I'm looking for headed into next week for price to trade down into this range here. Dropping down to the weekly chart, this is where we have to get into the hierarchy of PD arrays. Okay, you have down close candles in here, which we were previously treating as a bullish order block throughout this range, just like we did this down close here as a bullish order block here. Okay, when you are looking at PD arrays across time frames, you have to work from the highest time frame down to the lowest, because price is always gravitating to the highest time frame area of inefficiency or liquidity. So what does that mean for PD arrays within here? Well, if the objective is for price to reach toward a monthly PD array down here, and for this to be the high that's created before price trades into that monthly PD array, being the inefficiency that we have below, any PD array on a time frame lower than the monthly, so a weekly, a daily, 4-hour, I expect to be violated and to be traded through. So I would no longer be viewing this as a bullish order block. Any BISI or anything that you see in here on a daily chart, I would expect to be traded through. Any 4-hour BISI or down close candle traded through to reach into this area. So that's why we work from the highest time frame down to the lowest. Okay. You can see these areas still kind of act as speed bumps on the way to here, but if this is your objective, you're not expecting PD arrays in between that range to move price back to new highs. You're just expecting for price to trade into them, have somewhat of a retracement back into premium raise, and then continue down toward this objective here. So on a weekly chart, all we really need to look at is still the monthly BISI below. And you do have sell side liquidity resting here as well, which makes up the high end of that imbalance. Okay. On the daily chart, this March 15 low was the sell side that I was looking at last week, because it also makes up the low end of the consolidation on NASDAQ. You can see that we traded into that on Friday, and we also traded just below this March 11th low as well. So sell side being run there, and we still have the downside objectives to reach for here. So I would like to see up close candles now continue to support a price move lower down into the monthly BISI. So whether we reach straight for this or trade back up into this up close candle here, I'd like to see those areas act as premium raise and for price to gravitate lower down into the imbalance below. Below these lows into the remainder of this imbalance here from the daily, and it could work down as far as the low end. Okay, but we're not looking for objectives yet all the way down here. This just remains the objective. So the low-hanging fruit and the weekly objective would just be for price to trade from where it's at now down into 51.24 and a quarter. And that would be it for ES. Okay, it can trade further than that, but that's all that we'd be looking for in terms of the weekly objective. Any questions here on ES before I go to NASDAQ? I'm likely expecting that this will trade lower. If for some reason we are just reaching into a discount to continue working higher on the indices, I would only change the narrative and start looking for buy side if we're seeing closure on a daily chart through the midpoint of this up close candle here. What is the range? Where is premium? Where is discount? Well, I like to go to the higher time frames here. We don't really have a swing point on the monthly until down here, so that's a pretty extensive range. I'm not looking at that much of a retracement just yet. So you can go onto your weekly chart and just look for your swings. So here, low. Okay, so that's your first swing point right there. So if you want to look at your first dealing range, you can use this swing up to this high, and you would see that we're already trading back into discount. But remember that we want to reach for inefficiency and liquidity that exist in a discount. So just because we reached into a discount here doesn't mean that we have to turn higher. We can continue reaching down into the imbalance below. Okay, and if you want to look at something more extensive, then you could use this swing down here or this one here. Dealing ranges are a little bit subjective. I typically like to use the most energetic move, but I'll kind of track it across swing points. I'm not looking at, it needs to be in alignment with some form of other confluence as well. Like I'm not looking at this swing down here because I don't have a reason yet for the indices to come all the way back down into the midpoint here. If we're starting to see this BISI get traded through, then I may utilize this dealing range here to view equilibrium. But as for now, just taking a look at that. Ranjan, why closure above midpoint of the daily order block? It's because we're already reaching technically into a discount of this dealing range here. So if we're going to trade right from a discount and start violating premium arrays, which for premium arrays, I'm just looking at mitigation blocks, order blocks, anything above price right now if we're expecting it to continue gravitating lower. And so if we're trading from a discount and then violating premium arrays, that's giving reason for price to continue working higher. So as long as we're still respecting premium arrays, then I expect it to continue gravitating lower down into the objective below. Stuart, so the entire BISI is discount. Correct. Yeah, Farine, ES weekly, do you see that bullish order block on the weekly? Are you viewing that here? This, Florian? Yeah, I'm not viewing this as a bullish order block because remember what we talked about with the hierarchy of the time frames? We have a monthly objective that rests below these PD arrays. And so PD arrays in between that range that are on a lower time frame should be violated in order to reach there. So I'm not expecting this to propel price higher. I'm expecting it to be traded through and for price to gravitate to here, into this range from the monthly. Stuart, can you label all the blocks, mitigation block, everything? Yeah, this would be your mitigation block here. This down close candle, as you have a high, a low, a lower high. It's different from a breaker because breaker you would have like this, a high, a low, a higher high, and then this range here would become your breaker. Well, technically all of the down close candles here, which you can see is traded inside here and here and here and here, and then we go lower. This is your mitigation block here. The lowest down close in that range. Okay. And then if I'm looking at the order block, I'm looking at this range here, but I would more so just refer to the opening price since we don't have an imbalance aligned with the low end of it. Fluorine, I'm not seeing that as supporting the price, but an indication to go lower because we closed below 50%, the mean threshold. Yeah, so you're seeing that you're closing through the mean threshold, then that's a good indication that we can continue working into a deeper discount. So good. You're on the right track with that then. All right, any other questions here on ES? So price should be held back by the order block. I'd like to see price continue gravitating lower off of it. So whether we don't know where we're going to open at 6 p.m. this evening, but let's say we open exactly where we closed on Friday. We could either just go straight lower down into the imbalance below, or we could trade up into the range of this up close candle here. And then continue lower. So like this. Oops, this tool. Either that or just straight down. And only if we're trading and closing through here would I start to look for a price to trade back up into these highs. Okay, good. Let's go to NASDAQ then. Mauricio 52.33. Oh, for the mean threshold. 215 a quarter. Let me look at the body. Around 52.23. That's when I would start looking for reasons to look for higher prices. So just because you see a closure above it doesn't mean I would immediately change to look for price up here. But if I see a closure above it and I'm seeing on lower time frames discount rates then being respected, trading through premium rates, creating new discount rates, that's when I would start to look for higher prices. But I wouldn't even bother looking for the higher prices until I saw that closure. Until then, I would still expect for price to trade down here. All right, let's go to NASDAQ. Monthly, we haven't traded down as far as we had on ES yet. We also don't have the same monthly BISI that we have down here in ES. We do have one a bit lower. That's a more extensive target than what we're looking at on ES. So first, in terms of the next objective for NASDAQ, I would just want to look at the current monthly low, the prior monthly low, and as far as the midpoint of this wick here. Okay, so 17,751 and a half. We do have this imbalance resting below, so if you're seeing price displacing through that midpoint, then this is what I would my eye would gravitate to down here. But not looking for that quite yet because we still do have about let's see, almost 700 handles to that range. So that can be done in the course of a week, but it's a bit more extensive. So right now, just looking for sell side here and potentially the midpoint of the wick if we do gravitate down that low. On the weekly chart, just sell side resting here. You can see we left relative equal lows following last week, and we do have the March 15th, or that is March 15th low, but it's a weekly chart here. You'll see it when we get on the daily, but sell side resting under that weekly low as well. And then you do have discount raise to reach for down here as well. Let me bring that monthly wick down as well. Okay, there we go. Okay, so there's the midpoint of the monthly wick. So you could draw down into that weekly wick here and down into the monthly wick consequent encroachment there. And of course, if you're continuing to draw through that, you would have sell side below here, and a portion of this imbalance remaining. Okay, but I'm not necessarily expecting that low this week. Of course, I don't know where we're going to open at 6 p.m. So if we have a large gap opening, then potentially some further targets become a greater possibility. But if we just open kind of in this range, then headed into next week, I would just expect sell side here, here, and down into this wick. Those would be the objectives I'm looking at. Daily chart, same idea. Sell side from Thursday's low. ES purged Thursday's low. NASDAQ failed to do so. But going into this coming week, I would expect that that gets traded through the relative equal lows and the March 15th low, which represents the low end of this consolidation. Okay. And then you do have that midpoint of the monthly wick, which is inside your rejection block here as well. Okay. I know we had a lot of confusion over the last week regarding how price was trading inside this consolidation, so I do want to touch on that briefly as well. When we're trading inside of a higher time frame consolidation like this, you want to focus your attention on the extremes of the consolidation, so the very high and the very low. When we talked about price on Friday morning, after we saw this displacement here on Thursday, I still had the perspective that I shared of price trading down toward the sell side. What is the reason for that? Well, if you look at your consolidation, you have the low down here, the March 15th low that I marked the sell side here, and the high end here. If you put your fib on that low to that high, then you get equilibrium here, which means everything above represents a premium and everything below that is a discount. I'll even do this to make it clear. Premium, discount. Okay. So when we're trading inside of a consolidation, we want to give more weight to the extremes than we do to anything that's occurring in between. So though we did have a new BISI created here, look what's happening as price trades up into this range. First of all, no sell side was run out before that inefficiency was, or that imbalance was created. Okay, so there's no reason really for it to continue higher yet. Also, when you trade up through the high here, you don't continue to displace above it. We just consolidate and then immediately go back into the range. So I'm viewing this as a stop run to continue working lower. Where is it taking place? It's all inside of a premium, and we're inside of a consolidation where neither of the extremes have been purged yet. And so when we're trading in a consolidation like this, I'm not giving much weight to any displacement that's occurring inside the range of the consolidation unless the extremes have already been purged. So this would be a signal to me to start looking for higher prices here, here, and all the way up in here if price had first run out the sell side down below these lows and below this low and then done that. Since we just left all the lows intact, traded up into a premium, and showed no effort to continue displacing through the highs, we just view this as a return into premium to continue going lower. And now, what I've been talking about all week as well is that if we're going to continue in one direction, we want to see displacement occur just like this or like this, but through the extremes of the range. So either creating displacement through the sell side here or through the highest high of the consolidation. Otherwise, we expect for price to just remain in consolidation. And if you're looking to be a participant inside a consolidation, you have to have a different approach to trading. So instead of working from internal liquidity to external, like here, expecting for price to work down into this BISI, internal liquidity, and then trade higher, you want to trade external to internal. So instead, you'd be looking for liquidity to be purged, like here, and then go from external liquidity back to internal, which are imbalances and swing highs or lows that exist within a price range. Okay, so you'd find a short opportunity from here back into this range rather than looking for a long opportunity from here back to the upside. Does that make sense to everybody? When you're trading inside that consolidation, you want to work on finding opportunities around the extremes of the range, the external liquidity, and go back to internal liquidity. Any questions here on NASDAQ? Keys, I like it. Any other questions here? Otherwise, we'll go ahead and jump into the training exercise from last week. Mauricio, I see you typing in. Aiden, all good. If we were to open below 18,006, okay, below the sell side liquidity, and start displacing higher to fill the gap. Or that change your bearish outlook. All I'm really looking for on NASDAQ is for the sell side to be purged down here. So if we were to open below the sell side liquidity here, then I would probably expect some measure of price trading back up into the opening range. But we could continue lower off of that. That's where I want to give my attention to what's happening in the dollar and also what's happening across the other indices as well. So if NASDAQ were to open down there and we hadn't met the monthly objective on ES yet, I would still expect for price to continue lower. If we open up and immediately trade into the monthly objective, then I would be neutral going into the week, and I would wait and see if we get displacement back to the upside or if we continue to respect premium raise and trade lower. So I go into every week with a clear objective of where I expect for price to trade to. And if that objective is reached ahead of me finding a trade opportunity, then I have to go to neutral. Okay. All right, so I think that covers it then on indices. I will stop my screen share. And Carson, you can go ahead and pull up training exercise.
Alrighty, this first one was Mr. Ranjan. Narrative on PPI News on Thursday. NQ had an energetic move up to the buy side. Asia consolidated and London started a market maker sell model to the sell side. Given the exercise in the New York AM session, I was looking for a long in the discount of the prior days. Market maker buy model. Model used on the 5-minute chart for the long entry after the sell side liquidity and discount below equilibrium was taken. Entry was based on a 5-minute order block. There was news at 10 a.m., so I wanted to take profit prior to the news, primarily a scalp trade. 18-minute trade, 4 micros traded, 1.2 risk to reward. Time of day was the New York AM kill zone, 9:38 a.m. entry, 9:56 a.m. exit. PDR is used, 5-minute order block, drawn liquidity was sell side. Stop placement was below the swing low, partials taken at 20 handles. On the last 2 runners is when you went break even. Very common poised before. During the trade, I knew I was getting in this, and this was a scalp trade for a quick take profit. Once it hit 20 handles, I took partials and was even keeled neutral with the outcome of the results. Emotions after the trade, I'm glad I took my profits prior to the 10 a.m. high impact news, which started the second stage for the distribution. So here is your trade. Looks like you, yeah, so I mean, that's a key thing too, is understanding that 10 o'clock news, right? So it's more responsible, and you'll find a lot more good than harm waiting to be in a trade prior to that 10 a.m. And if you are in a trade leading up to that 10 a.m. news event, whatever the case is, right, you did the right thing with regards to like paying yourself, right? Because you can see, you know, your exit is right where price probably made the high for the rest of the day. So you have to kind of think in the back of your mind what benefit do I have trying to hold something over the 10 a.m. news, right? To me, it's just you're curious, right? I like that you're trading micros. I know that we had talked about that. Trading micros is key, right? If you were trading one mini, it's a lot harder. It's a lot harder to do something like this, right? You're either in the trade or you're out of the trade. So, yeah, I mean, great trade on my end. I don't really see anything too crazy. I think, or Henry, you got anything?
I think this is great. I like that you made the switch to micros. I think that's a good adjustment here. Um, and you manage it really well, treating it as a retracement, trading that external back to internal here, and then just recognizing that you're trading up into an imbalance is a good place to exit. So you're not reaching all the way back for the buy side. You're just looking for what's that low hanging fruit where you can start taking your partials at. So I think you did really well with this one, Ron John.
There's the business. And then we've got Kate's, which I'm going to throw hers to the side because she's got. Okay. So, narrative, we made an AMD prior to market open thanks to CPI, so I thought price could return back to the range equilibrium in New York. So she was bullish, right? So she's got price consolidating in here, manipulating right here, distributing down there, right? And the idea is, do we pull back up to equilibrium? Next. In here. All right, so before the trade, calm. I already visualized the idea prior to the market open, like my chart above it. So I was just waiting to see if the setup actually formed. We didn't end up making a lower low on NQ, but YM did. I felt that it was good enough for me. In the beginning, I didn't feel much. I got 5 out of 8 of my contracts pretty quickly. Then I had to sit through a lot of back and forth to see whether or not price would reach for the range equilibrium. When we had that displacement lower after taking out the previous highs, I decided to exit another contract. After, felt okay. Maybe I should have taken another contract off when we closed above the previous high. But other than that, I'm happy with the trade, especially since it was something already planned pre-market. It was nice to see it sort of play out. You can see the SMT here with regards to ES, NQ, and then YM. And then here is the business. 1 hour and 3 minutes. 8 micros, 3.2 and 1.1. 1 hour and 3. It looks like you might have copied that right there, Kate. But I can tell you what you're using. You're using an order block. You're using a 15-minute. I believe that's probably a mitigation block, or it's a fair value gap. You can see she's understanding market structure in here. We pull back higher, dip down into here, wanting that equilibrium, but knowing that she doesn't need that equilibrium to be profitable. So from there, 2 entries, I'm assuming all down in here. And immediately as she gets that reaction, right, she's paying herself in here. And with regards to when you're talking about, I should have taken another contract off when we closed the previous high. I think like right here, you're probably talking about right here. Yes and no, because you don't always need to have the idea of like, you have to partial after every single high. It's dependent on you. If that's the way that you want to treat it, sure. But you're playing for up here and you already took a partial. So this is very discretionary. Like you did this so you could be able to hold for this. So don't beat yourself up for not doing this. So it's one of those things where it's super discretionary. I get it too. In hindsight, yeah, it would have been nice, but I mean, you trailed your stop fine too. So you still got stopped out in profit. So to me, I mean, it's something that I don't think you should really beat yourself up on, because yeah, you could have taken a partial here, but I think money wise, yeah, you would have made more money on the trade, but you want to be okay with the idea of like, this was where you were going, this is where you wanted it to go, excuse me, and you were willing to hold for that. And the way you were willing to hold for it was because of the 5 contracts here. So I wouldn't beat yourself up on that. Other than that, all good on my end. Great trade. You killed these training exercises, Kate. Henry, you got anything?
Oh, well done, Kate. I like that this was planned ahead of the market open too. You already had an idea of where you wanted to see price make a run to at that equity open. Really nice framework for the trade. Price coming back down into discount into the order block there. I like your stop placement as well. Nicely refined there. And yeah, I don't think you're wrong necessarily for not taking another partial up there. ICT talks about it too. If you want to graduate into the idea of capturing larger ranges and taking home the larger winning trades, you have to be willing to return that profit to the market as well. Remember that those unrealized gains. And so if you're always trailing up your stop, if you're always partialing at every single high, then it doesn't give you the opportunity to reach for that range. I think partials are the best way to go a lot of times because you're ensuring that you're getting paid and you're reducing your the emotional impact that any sort of retracement has on you. But you already did that in this trade when you took off 5 out of 8 contracts. So you did the right thing here. Yeah, I'm on the same page with Carson. I don't think you really have to beat yourself up about it. The only other thing I would touch on, and I try to think about this in my trading too, and sometimes I slip up on it. You get into a mindset of, wow, we're so close to my objective. I want to see it trade there before I take anything off the trade. And what's important to get back into the mindset of sometimes is something that I like to talk about as dynamic risk to reward. It's like when does the trade still offer more opportunity for you to gain than what you could lose on it in terms of your unrealized. So when you enter this trade, you have it marked out here that you're risking 1 to make 3 essentially. When price is trading all the way up to the highs and making a new high, now from where your entry is, it's a lot further to your objective than it is to your or it's a lot further to your entry than it is to your objective. And so now if you're thinking about things in terms of risk reward, which I don't really like risk reward a lot because it builds like false narratives in people's minds, but if you are looking at it in that way, it's now backwards in a sense, right? Because you're potentially giving back more than you have to gain. And so that's when I like to switch into a perspective of, does it make sense to trail my stop or take something off the trade? It doesn't mean you have to, but that's when you can switch into that mindset of, well, maybe it makes sense to pull something off now. Whether that is just taking a partial or trailing up your stop loss, however you choose to manage it. But that's when you can switch into that mindset. Of course, if you do want to catch really large ranges, you have to be okay with sitting through retracements and allowing for price to come back against you before you do reach your objective. So if your intent here was to reach out for that CPI high, then you did the right thing taking that first partial and then not looking to jam up your stop loss. So you really can't beat yourself up about it. But just a little note there for anyone who's interested in that mindset idea. But well done, Kate. Yeah, you did really great throughout a lot of these training exercises. I see your last comment down there as well. Carson, I don't know if you screenshotted it. Kate said, I know this is likely last training exercise. Bear with me as I write one more long-winded paragraph. I cannot overstate how transformative these exercises have been to my development as a trader. Thanks to Carson and Henry for coming up with the idea. More importantly, for your valuable feedback on every single one of our trades. We appreciate that, Kate. You've done really well. Everyone's done really well. Anyone who's taking time to do these submissions. I know it's an extra step, right? It's not something that you have to do, but it's an extra step that's going to help you move forward a little bit more. And while we're making a change in how we're doing the training exercises, it may not be the last one. We try and adapt and change things, and we like getting your feedback on things too. So if there's something you like or don't like, remember this community is for you, and so we want to make it everything we do to be in your best interest. And all of the training exercises that are in here are still going to be available. There's 29 of them. So if any of y'all would like to do the training exercises and haven't done them yet, then feel free to work through those. They're great to take a look back at as we go forward. Okay,
Cool.
that's it on my end.
Yeah, I'm all good. Quick and easy.
Let me take a look at the
Quick and easy.
comments. Dynamic risk reward, what a concept. Yeah, I like thinking about it that way as well. Aiden, agree. Okay, good stuff. All right, any other questions from this week in terms of the outlook, or any last questions? Feel free to ask anything.
Speak now or forever hold your peace.
Go ahead, Aiden. When coming to find monthly objectives.
Shout out to the crew in the lounge that's been putting in hours in there, by the way.
Yeah, that's been awesome to see.
I feel like you guys were in there every single day this week.
What are some of the things you'd look for if you were to decide on either sell side or buy side? What do you look out for? Like, how do I come to where I'm reaching for on the monthly? So same idea as the weekly. Look at where do imbalances exist and where do prior monthly highs and lows exist. That represents your liquidity, and then you can see imbalances just as a fair value gap. So I think of draw on liquidity as basically the easiest way to get to your draw on liquidity is what has been the recent order flow and what are you in closest proximity to. I did a little, I wish I had it recorded actually, because we did a little discussion on this in the lounge actually, but here, let me pull up my chart one more time just so we can go into this real quick, because this is a good discussion actually. Weekly. Okay. So when you're thinking about drawing liquidity, I like to just think in terms of proximity, and we're only ever looking for two things. We're looking for where's liquidity and where is inefficiency. Whatever we're in the closest proximity to is likely what we're going to reach for. Okay, so if we're just looking on a weekly chart here, how do we determine weekly bias? Well, here we've drawn back down into a discount of the range, and then on this candle we start to go higher. Where does the candle close? Well, it closes all the way up at the high end. So what is it more likely to reach for next week? You want to mark out your highs and the lows of the candle. Well, if your high is right here and your low is down here, is this week more likely to reach for this low or this high? That high. It's right next to it, right? So that becomes your initial draw. If we are to draw through that, is it then more likely to reach for here and here or for here? Well, those are a lot closer, so you're probably going to reach for there. So you're just working in terms of proximity. And then what about when we create an imbalance? Well, here we continue displacing higher. Are we more likely to reach for this high or this low going into this week? Well, that high, because we're really close to it. Okay. Then this candle closes here. And are we more likely to reach into this high or this low? Well, we're a little bit closer to that high, and we've been bullish, so initially expecting a bullish bias, and we reach into that high. Now, this candle trades above that high, but does not close above it, and an inefficiency is left below. That's when I start looking for the opportunity of a retracement. Okay. So now going into this following week, we have the high that can be reached for here. And this is the same thing you do on a monthly chart, Aiden, to answer your question. There's just more examples here on a weekly chart. And of course, you want to work from the hierarchy perspective we talked about before. So if there's a monthly draw, like if we had a monthly BISI down here, then I'm expecting for weekly PD arrays that would support a price move higher to be violated and for price to draw down into that monthly PD array. On the weekly here, going into this week here, you could trade into this week's high or this week's low. We're a little bit closer to the high end, and you do see we trade into it there. We're still in consolidation, and again, you're seeing that we're trading above it, but not closing above it there. So now as we get into the next week, you have this high and this low to reach for. Okay. We've been consolidating. We're not closing above highs. It makes sense now to have a retracement. And so initially, we can look for a retracement down into prior week's lows, and if we have an inefficiency below, which we have here. And that's where we reach into. And then after we reach into it and close back up in the range, now we just go back to the exact same idea for the following week. Are we more likely to reach above this candle's high or low? Well, we're really close to the high, so we're probably going to go for the high. If we reach above the high, are we then more likely to reach to the low or a high that was formed before the high? So it's just whatever's in the closest proximity and aligned with order flow. That's the easiest way to identify your drawn liquidity. And you're doing the same things on your monthly chart. So if I look on the monthly here, we'll look throughout this range. So here, you're closing up at the highs. Are you more likely to draw into that high or that low? Well, you're close to the high, so you draw into the high. Again here, the high or the low going into this month. Really close to the high, so we draw up into the high. Now, going into this month, you've traded up above the highs and you've reached into an imbalance here. So you have a reason for price to now retrace. So you look at the high and the low in this imbalance in here. If we're going to trade down into the imbalance, which is also the low of the monthly candle here, then I'm expecting weekly and daily PD arrays between this low and the opening price to be violated. So if I drop into a weekly, what do we have between the high end of the imbalance and the opening price for the month, which is right here? We have an imbalance here, we have a down close candle here, and a down close candle here. What happens? They all get traded through to reach for the imbalance on the monthly. So highest time frame down to lowest, and you're just looking at prior candle highs and lows and imbalances. Whatever's in the closest proximity, that's your draw on liquidity. Cool. Good question. Thanks, Aiden. Okay.
Right on, right on.
All right, I guess that covers it for this week then. So we'll be back to it this week. Morning chart and chats at 8:45. We'll have a stream on Monday as well. Oh, and the next 2022 study session, Monday night. So let me look at that as well and just update on the what needs to be prepared for that. Let's see, tomorrow is the 15th. So tomorrow, 8 p.m. New York Eastern Time, it's our 5, our fifth session of the 2022 study group. And we'll be talking about episode 7 of the 2022 mentorship, daily bias and consolidation hurdles. So there you go. A little note ahead of that discussion on daily bias. Okay, good stuff. Then we'll see y'all. We'll see y'all in Discord this week, and we'll see you for 8 p.m. tomorrow. Study group.
Enjoy your Sunday, everyone.
All right, stay safe and take care, y'all.